Hello and welcome to my channel. If you have not subscribed yet, hit subscribe and notification icon now to never miss out on our new videos. Today we will be discussing how to perform a fundamental analysis of stocks that are in your list of potential investments opportunities. Fundamental analysis is a method of evaluating the intrinsic value of a stock by examining its financial statements, industry trends, and other economic indicators. The goal of fundamental analysis is to determine whether a stock is undervalued or overvalued, and whether it is a good investment. Check out my post on Instagram for full theory. Link in the description. For now, let's look at an example of conducting fundamental analysis on a hypothetical company using numerical data. Let's say the company is XYZ Incorporated, a manufacturer of consumer electronics, and we gather the following 3 years financial data for XYZ company. Revenue, profit margin, earning per share, and calculated price-earnings ratio. If you are not aware of key financial ratios, do check out my videos on this topic, link in the description. We analyze the company's financial performance and see that revenue and profit margin have both increased steadily over the past 3 years, and EPS has also increased. This is a positive sign. We evaluate the company's management and leadership and determine that they have a strong track record, and the company has good corporate governance practices. We consider the company's competitive advantage within its industry and find that it has a strong brand and a diverse product line. We determine the company's intrinsic value using the P/E ratio. Based on a P/E ratio of 10, the intrinsic value of the stock is $15. Now how to take decision, i.e., whether the stock is undervalued or overvalued. Let's look at 2 scenarios in decision making. The market prices plays an important role in making the decision whether or not purchase a specific stock. Scenario A, market price $20 per share. We compare the intrinsic value of $15 to the current market price of the stock, which is $20. The market price is higher than the intrinsic value, which suggests that the stock may be overvalued. Don't buy. Scenario B, market price $12 per share. We compare the intrinsic value of $15 to the current market price of the stock, which is $12. The market price is lower than the intrinsic value, which suggests that the stock may be undervalued. Buy now. Thank you for watching. If this video was useful, subscribe and click on the notification icon to never miss out on a new video. Comment, I want a copy of book. The book is free for first 100 subscribers. Follow me on Instagram, YouTube, and Twitter. Link in the description. Thank you.